This small weekly bar right here would have given you an indication that in fact the rally was going to continue, and it did. We went from 102 up to 117. At that point we had a large red bar, a second large red bar, and those would have certainly indicated to you that volatility was going to come back in the market based on the fact that we started volatility back here. And then, of course, the market started to stabilize. It looked like the selling pressure was starting to be absorbed by buyers based on these long tails on these candlesticks. And at this point, with these two bars right here, on much lower volume, again, if we take a look at the volume pattern here, you can see the volume pattern starting to decline here. At the same time, we had these this large selling event here, and then we had the retest in the same price area. In the very same price area, this, however, on this side we had large volume. On this side of the price area, we had low volume. That would have given you a very good clue that, in fact, the market was ready to advance once again. So we had high volume on this side. We had low volume retesting that same price area right around 100, 102. And that would have told you that, in fact, we were probably going to see another leg of higher prices. This little bar right here would have given you an indication that in fact volatility was going to start to decline because it was a relatively narrow bar. Again, we had another narrow bar here and another narrow bar here. So volatility continued to decline as the market took another shot at a rally, leading it all the way from the 102 level up to 135. And then we had another large red bar indicating that the potential for volatility was coming back into the market. We also saw it here. At that point, you would have been alert because of the large red bars on the weekly chart that volatility was going to be coming back into the market, and we would probably see a significant decline. Well, that's exactly what happened here. We had a significant decline after some additional volatility. And now it appears that, in fact, the selling pressure on these weekly charts is being met by buyers. Buyers are starting to step in once again. So if you were trading this market right now and you saw the wide-ranging bars, what would you do? What would you think about the current market? Well, number one is that we saw that the selling pressure was absorbed probably by buying pressure, and that's why we have these long wicks on these candlesticks. However, the wide-ranging bars continue. We did get a small test right here. The prices came back down into a moderate price area. However, we don't have any test down here of this price area on lower volume. But this particular candlestick right here was done on very low volume. Even though it was wide-ranging, the market reversed. But we do not have any small bars yet. If we do start to have some small bars, or we have a retest of this area, and the volume is extremely light, much lighter than it is here, then I'd say that we probably have a good chance of going higher. So it's too early to say. Remember, the two most important things that you can consider to be a successful trader is, number one, preservation of capital. And number two is the fact that you need patience in order to wait for a setup of the market. The market needs to be set up based on the guidelines that I just gave you. We're looking for small ranging bars before we take a position long, and we're looking for signals that in fact volatility will increase and the market will decline. We don't have any of that right now. In the next video, I'm going to start giving you some specific strategies that we can use to take advantage of all kinds of markets, but first having to identify the major trend in the amount of volatility that we're expecting in the future. It's easier to predict volatility in the future of the market than it is to predict the trend. That's why I'm consistent in trying to identify the environment that you're trading in. And I'm trying to emphasize the fact that you need to know the environment that you're trading in before you initiate a position. If you think volatility is going to increase, then you need to trade appropriately for that event. If you think volatility will decrease, then you need to trade appropriately for that event. And that's why I've spent so much time on trying to help you identify high volatility environments and then the potential for entering low volatility environments. And we're going to be talking about specific strategies that we can use in both of those environments in the next few videos.